Good afternoon, everybody. Thank you very much for having me here on stage to tell you a little bit more about Pink. But I first wanted to start off by telling you about my co-founder who couldn't unfortunately be here today. His name is Seth, and recently he exited a business called Scout 7. Now, Scout 7 used crowd wisdom and experts in-house to make decisions on how to invest, how Premiership football clubs should invest in football players. Now, since he exited that business a couple of years ago, he spent all of his time and money on Pink, doing the exact same thing, but for everyday investors. Because really, if you're an everyday investor, the odds are truly stacked against you. 76% of Western millennials are financially literate, and that means $1.4 trillion a year is invested badly or not at all. Now, this is going to be a huge, colossal issue for us going forward in the future, a generational issue, and it's something that we really do need to fix. Now, our solution is simply, we democratize and gamify the fund investment process. We reward smarter collective decisions to drive a single fund which benefits everybody who participates. We have 9,500 users in our global system, and that drives our crowd wisdom system. Our AI looks at each individual crowd member and looks to see who we should trade with and who we should trade against. And then our experts in-house decide from that data and from their own analysis whether or not we should make a trade on that day. And if all three elements of our system at Pink, the crowd, the AI, and the experts agree, we make a trade. Since launching, we've been 70.58% accurate, and this allows our users to have influence on where our fund goes without all the full responsibility of choosing where they should put their money. This has driven our fund to do a 9.5% return in the last 4 weeks alone, and in the last 3 months alone. And we're focusing this on the $4.5 trillion millennial investment market, and we're most focused on the $221 billion of that, which are 28 to 45-year-olds, slightly more entrepreneurial, and have been the base of our core users so far. The way that we work as a company is we charge 0.12% of assets under management, and we get that through three tranches. We get it through our B2C, through our app, as well as B2B partnerships with challenger banks. And we also do data sales to other hedge funds who want to gain the benefit of crowd wisdom. Our rockstar team have built systems for Google, JP Morgan, Barclays, MUFG, Disney, to say but a few. And we're supported by the UK's largest banks and institutions. We've just been named by Business Insider as a top 12 fintech to watch. And our engagement rates in social are 10 times higher than that of our nearest competitor, Revolut. In terms of competition out there, we are creating a new category of social investing. Call us Social Investing 2.0. That's Pink. I'm a little bit over time, so thank you very much for listening to me, and I'd love to hear any questions.
In what markets are you trading?
So we have 9,500 users across 160 different countries. Our fund at the moment is privately held, so it's only high net worth individuals at the moment. But we want to open it up to retail investors towards the end of next year.
And what are the asset classes that the fund's investing in?
So right now we focus on the sharp edge to our blade, which is short-term asset classes, because we're able to apply our crowd wisdom over that. So it's Bitcoin, gold, and NASDAQ 100 as the first three assets that we're using our predictions across. Later on next year, we're adding on property and real estate, as well as early stage VC as well, which we've got a really exciting way of how we use the crowd to filter through that data.
So who's determining the high-level strategy and allocation of between different assets?
So the allocation between different assets is decided initially by our experts in-house and then pitched out to the crowd to say, what do you think of this? So for example, we've got an ETF structure beneath our crowd wisdom and AI system that we ask the crowd, how do you feel about weapons? How do you feel about nuclear? How do you feel about non-renewable energy? And almost unanimously, of course, they went against all three of those areas, which means that we're predominantly in socially sustainable, good projects. But everything is decided by our community. In fact, everything in terms of our app and how we display ourselves and where we go, and even our pink jackets is decided by our community.
So is there a voting mechanism? How do people decide?
So there's a number of different ways the community interacts with us. That's through our social channels, also obviously through the app in terms of predicting elements. And then we ask certain direct questions through the app to get really quantifiable answers. And then beyond that, our top 10 crowd members are also in our Slack channels. So we talk to them on a daily basis and they help us develop out different things.
What's participation like? Because I've seen in these kind of voting systems that in the end it's like a very small percentage of people who are actually making decisions.
No, of course. We try and keep our crowd particularly small, just down to active users. So we recently, our crowd was around 13,000 users a couple of months ago. We culled out a whole bunch of users because they weren't actively participating. So the 9,500 that we have at the moment, between 10 and 15% every day participate, and that changes between the crowd. So they're all active, but they're not necessarily active exactly every day, but more often than not, most of them are.
Have you figured out your cost of investor acquisition yet? And how does it compare to a nutmeg, for example?
Yeah, so that's really one of the sharp edges of our blade, is that our cost of acquisition is very, very low. Now, our user cost for the crowd is under 50 cents a user. We're very, very good at onboarding users, but of course they're getting benefit of being part of the crowd because they gain shares in the fund. Now, we know that 10% of those users, because through the polling and talking to them, are going to convert over to investors, and with an average ticket size of around $200 when the retail mechanism comes on board. Now, whilst I don't believe that we'll be able to get investor acquisition down to 50 cents, we do believe we can get to a market-beating rate of around $20 to $30. And that's in the range of Moneybox, some of our other competitors in the UK, but well below some of the challenger banks that are out there. And that's really because of our engagement figures are so high.
How do you plan to maintain the quality of the insights from your community?
It's a good question. Well, the quality is derived through the crowd wisdom system. So by suggestions coming in, as long as there is enough suggestions in a particular area, that's the area that we go into. Now, you might be concerned with being able to sway the system, but if you're not a participant for a long period of time, our AI doesn't pay much attention to you. You have to be consistent. You have to be part of the community. You have to really want this to work for you and everybody else, for the whole system to work. And that provides the quality.
And what's the ultimate purpose here for this platform? Is it to drive investment towards areas that's more community driven, or is it still a financial play where you're benchmarked against all other investment products?
So the final outcome for us, what we want to achieve, is really what we call a DSAO, a decentralized semi-autonomous organization, where anybody can use this as a device to put money into, it appreciates over time, and then take their money back out. And it has very little governance in there, except for the system and the community that drives it.
So you compare yourselves against other funds in the market,
yeah,
and it's a question of accessibility then?
Certainly at the moment we have to compare ourselves, but the long term we will be in another league of our own. I think that's it. I think that's time's up.
Yeah, and that is time's up.
Yeah.
So thank you very much to Rupert from Pink.
Thank you very much. Thank you.
Fantastic. Up next, we have another team. We're going to keep this moving nice and quick. Remember, the judges are looking for passion. Can I welcome the team from AmpNet to the stage?
I can also do that, but that's not my pitch, sorry. Spoilers. Sorry, you said switch.
What are you doing?
I mean, I can try probably. Yay!
Oh.
I've learned how imperfect the credit scoring is the hard way. When I first landed in Norway, it wasn't that hard to get a bank account, which is taken a few weeks, obviously, but go to and get some simple things like a phone subscription to contact my friends and family and say, I'm good. When I landed at the store, they say, no, unfortunately, we can't give you any subscription because your credit score is nothing. We have no idea about you. And only after a few days talking with the customer support, I was able to manage that and to say my mom that I'm alive and everything's fine. And that was only possible after I sent them statements from my homeland bank and they verified that I'm a trustworthy person. Just imagine that this experience would be available, like this personal customer experience would be available to traditional or more conservative industries such as banking. Then 7 out of 10 people who now struggle to get a loan and get rejected would get their chance. And around 10% of them, which means one more guy, will realize their dream by getting the money they need. But that's not possible until the bank or other lenders see us as the ideal personal profile and try to feed us within the shape. But when they understand that we are unique and we are different, and there are thousands of different shapes, and if you fit within one of them and you're trustworthy, but fall out of the general profile, you will not get the money you need. That's why I started GoScore. GoScore is a bank tech company which develops a proprietary technology in order to deliver a fast, accurate, and real-time credit assessment and fair, what's important, real-time assessment for private individuals. We use different data sources, for example, MasterCard, transactional history, and Google Maps in order to build a full and accurate personal financial profile so our partners can get personalized offers to their customers to make it personal, like never before. So we and our partners would like to contribute back to the society by explaining what is credit scoring and how in general at least, their credit evaluation is done, as well as give a personalized tips about their risk assessment made to understand, for example, why my application has been rejected. But that's not really possible without experienced and knowledgeable team. They all have at least mastered in engineering, in data science, in entrepreneurship, and MBA. Take, for example, Chris. She's our head of research and development, and she recently tested our technology and validated it's become top 2% out of 4,400 different teams all around the globe. My name is Max, and I would like to answer all your questions now or later on at the booth number 23. Thank you so much.
Can you talk a bit about what are your assumptions and the types of data you collect to build that profile? So you just now had a bunch of data sources there. What I didn't see there was at least social media, behavioral stuff. What's the logic behind how you can improve an understanding of a person?
That's a perfect question, because we've been talking basically, because we are from Norway, we basically talk with the Norwegian market, and what we found there, we have a lot of what's it called, formatted data, like transactional and others, which are not yet used. So to use the social networks, LinkedIn and others will be the next step for us. And we are a little bit afraid, and our FCA is basically afraid of using that because it could raise a discrimination among the different people. So we would like to take the steps, but it will be the next steps for us.
How do you think about sizing your market opportunity?
We estimate the global market all around the world around $17 billion, and Norwegian is up to $1 billion. Norwegian, I mean Norway, Sweden, Denmark, and Finland.
And within that, who's your target customer?
I mean, we would love to be every bank our customer, but we are starting with small local banks who are easier to work with and faster to react and test it out, and more not consumer friendly, but more into the society development, at least local groups.
So oftentimes you propose a solution because there's a problem. In this case, do the banks, at least in Norway, have a problem of default? And what's that percentage versus comparable markets?
It kind of depends from time to time. So it was a crisis 4 years ago, then it was higher, and now it's lower again. But it's from I mean, numbers from 2 to 20%. It kind of depends on the time of the market. I mean, if you're talking the default rate, but yeah, definitely default rate, the problem of default rate exists in Norway.
So how is your system better than the current scoring system? I mean, what makes it more fair?
Yeah, that's an excellent question. Thank you for asking that. Basically, the current assessment is made by the text report from the last year, which can't perfectly or accurately says who person you are, and even that doesn't give us any kind of understanding on how smart you're using the money. So, for example, taking into account transactional data, your investments, and all other different sources of data will give you much more and better understanding about the customer. Take, for example, recent Apple car scandal, not a scandal, but boom around them. And for example, if I can't brag about myself, but if we, for example, take into account the investments made by the family, then the credit scoring will definitely be different, and they will get more personalized or more fair experience, I believe.
So how do you do the matching between the customers and the banks? And do the banks typically offer this type of wide range loans to the customers?
The first question was how we match, right?
Yeah.
So basically, we try to understand, can the customer afford this credit on one side? Is it sustainable for him to take this loan, credit card, or whatever? And on the other side, try to ask to push the bank to personalize the offers, like interest rate and the limits and the monthly rate and fees, all the things. Can you please repeat the second question?
Yes, sure. So does that mean that you have to educate banks to offer this type of new, maybe long tail loans?
I'm sorry, could you rephrase it? Sorry.
So yeah, do you integrate the existing loan offerings from the banks, or do you have to teach them, or do you have to make them introduce new offerings to the market?
Yeah, thank you so much for this question. Basically, we start with the offers they have and trying to see how they now work with the customers, because basically how it works, I mean, it's in Norway, you can call and ask for reduce a little bit your interest rate, and it works pretty well. So try to kind of automate this experience and give it more personal and fast for the customer. So yeah, we start with the existing offers, and we definitely working with some of the banks to get our own goal score special offers.
And have you done anything to analyze the quality of your predictions versus existing methods?
Yeah, that's a super tough question. Thank you for it. I would say now we're working toward the bank to have a privacy product to prove this number and to show you next time. So now we work with several Norwegian banks and also several European banks like OTP, ING, or Barclays.
Cool.
In what stage of development do you already have a working product? Are people already taking loans with your system?
Yeah, we have a working prototype, and we would like to test it together with the bank. That's why we apply for this pilot product or POC with them, in order to give you the numbers next time.
Fantastic. Thank you so much, Max. Let's give you a huge round of applause. Obviously, that was not AmpNet. I do apologize to GoScore. Up next, though, we do have AmpNet. You've seen their slides already, so you might know what's in store. Let's give AmpNet a huge round of applause and welcome them to the stage. Woo!
Well, obviously, as they said, you've seen my slides. So should I even be speaking? Maybe not, but let's give it a shot. Utility death spiral. Not a death metal band name, but a big problem in utilities, electric utilities. As people are transferring to renewable energy sources and moving into self-production, large utilities, they're losing a lot of money. So RWE in Germany lost $3.5 billion in 2013. That's their first loss since 1949, and it's been getting worse and worse. What's the solution? Energy communities. It's groups of people working together to invest into renewable energy and to buy and sell electricity amongst themselves. Look at the numbers in Germany. From 2006 to 2014, from 86 to 973. They are the death knell of traditional electric utilities. They're all over Europe, not just in Germany. They're all over the US, but they have some big issues. First of all, onboarding takes forever. You want to join an energy community? Well, good luck. It takes 5 days to even get into it, and then to sort out all the papers, up to 5 days more. In the digital age, not acceptable. Once you're in, you do everything by sending mail. Want to invest? Sign a contract, send it by mail. Want to get out of your investment? Sign a contract, send it by mail. Want to increase your participation? Sign a contract, send it by mail. Also not acceptable. And they are not connected with anyone. There's 2,500 energy communities in the European Union, and they all work as single isolated entities. That doesn't cut it. That's why we built AmpNet, which is a platform that makes running energy communities simple and efficient. So what do? We onboard customers using facial recognition with our partners, who you'll be hearing from more in a bit, and AI in minutes instead of days. We crowd invest into renewable energy sources through our blockchain platform with a click of a button, not by signing any contract, not by sending it in by mail. We connect them with regulated electricity exchanges and enable them to participate in an open market, being connected with everyone, being the largest electricity selling entity in Europe when you combine all 2,500 of them together. We're working on an established market, Rescoop EU, 2,500 energy communities. In the US, America's electric cooperatives, 50 billion a year market. We have great market traction. We've already licensed to 2 energy communities, and we got an exclusive deal to fund all renewable projects for Greenpeace through their crowdfunding platform and foundation. This is a bit of branding for our Greenpeace project. We raised 2 rounds, with one of them being with InnoEnergy, biggest fund in Europe for renewable investments, and we're looking for a scaling round of 1.5 to 2 million to take this worldwide and to the next level. Thank you very much.
Can you talk about your business model a bit? Your pricing model?
Yes, we charge $2 per customer per month to our clients who are using the full platform, which is the investments, electricity selling, and electricity exchange. We also offer only the crowd investment platform. In that case, we charge from 1 to 5% of the project value for all projects which are funded through us.
And where is the investment going into? A new community's solar panels or?
Exactly. So 90% of energy communities actually crowd invest their assets, even today. With the signing of contracts and sending them by mail, they do a lot of crowdfunding. That's all equity-based. Legally, it's all through the cooperative model. So, there's a little bit less of a conundrum on how to regulate it financially. But so far, they haven't been able to do it digitally. Everything's been fully manual, and this is why I think every time we speak with them, basically they are super interested in the product because they're already doing all of this. But right now, it's taking them, 5 full-time positions hired and a lot of time wasted to do the same thing.
Why do you think having a blockchain is necessary?
Sorry?
Why do you think having a blockchain is necessary?
So for now, blockchain is completely unnecessary. We're thinking about the big game. This is why we're starting with the blockchain. One day, hopefully when regulation moves in the favorable direction, we will want to take all of our client energy communities and all of the renewable energy sources they've crowd invested. We will already have all of the shares tokenized, and then hopefully one day we will make an exchange where people will be able to freely sell and buy shares in renewable energy projects. Right now, investments into renewable energy are a super illiquid asset. So basically, you can get out. There's no proper market to get out. If you want to be with your asset till the end of its life cycle, you're looking at 15 to 25 years until your asset is done producing money. Well, maybe you want out after 5 years. Maybe you need the money right now, and currently it's not available. So blockchain is for the big game. Currently we're using it as a future-proof method of building our product.
So speaking of liquidity, if I were to invest in your company, it's a good idea. How do I get out? Where's my liquidity going to come from?
So as for our startup, we have one very interesting way of exiting, which we have already discussed with several large companies. So as I mentioned, the utility death spiral is killing classic utilities. Basically, RWE had their first losses since 1949. The same happened to Vattenfall. The same happened to a lot of other utilities. And right now, every person that goes into self-production is a loss on their books because they are no longer their customer. They already have their existing assets. If, let's say, potentially, if there's a utility company there, a utility company were to acquire AmpNet, each person that moves away from them would still stay on their books as somebody making a bit less profit, but still not a loss. So either going public one day or an acquisition by one of the utility companies which are affected by the death spiral.
And what would you say is the key asset in your transactional platform here? Is it the code? Is it the community? Is it your first mover advantage? What's your key asset?
So the key asset, I think, is the fact that I showed that the communities are currently not connected. So we have a very strong network effect here. Because every community right now works as an isolated small community investing into solar. When they start selling their electricity on the open market, the big players just mow them. They just, have no advantages there. They get the worst prices, the worst deals. With us, they will be able to work together. So imagine 2,500 energy communities selling as a single entity on the market. So once we get, 10, 50, 20, 200,000 communities onboarded, it will make much more sense to join us than any of our competitors just for the network effects alone.
And do you currently have competitors, and what's their network effect? And if they do creep up, how do you basically defend your turf?
So we do have some competitors in regards to this blockchain space connecting with buyers and sellers of electricity. Their problem, in my regard, is they went to blockchain. So they went all in on blockchain, and they don't have any connections with the legacy financial systems. Our entire platform works in euros, in dollars. We are connected with all the regular banks, deposits. We have some partners who are doing the transaction management for us and stuff like that. So if they creep up, I think we'll grow faster than them because we don't have to battle the regulation on the blockchain side.
Fantastic. Let's give AmpNet a huge round of applause. Up next, we have the team from Identium coming to the stage to pitch for their money. So let's give them a huge round of applause too.
So last Friday, I had a really awesome day. Rashid contacted me and he said that they are improving investment into my company. Then George contacted me and said that he's writing a book and he wants me to contribute with a chapter about digital identity. Then I went to the bank and they said that they approved a loan for my new car. Then I went to the home decoration company and they said that they have finalized the plans for my new apartment. And lastly, in the evening, I got a match with this really pretty girl, and we started chatting to arrange a date. However, this account turned to be fake. The email from George also turned out to be fake. When I was at the bank, I actually forgot to give them a paper about my salary receipt, so they couldn't disburse the loan. When I was at the home decoration building, I forgot my ID card at the desk, at the security desk. And lastly, guess what? Allison turned out to be some John Doe just catfishing for identity data. So, yeah, now imagine, what if I could have, both to Rashid and George, send a message, please identify yourself via this link. What if I could have sent to the bank a digitally signed confirmation of my salary remotely? What if I could have identified myself with my mobile phone instead of my ID card at the security desk? And what if I could have nicely asked Allison to just confirm her first name? This is what we do. This is digital identity platform. We provide components for companies and a native mobile application for people to manage their digital identity. Young generation is actually demanding this. B2B market space is huge. It requires digital transformation, and we can capture a large portion of it. B2C is practically untapped. We can capture a very large portion of it. It's going to be free for customers, and for companies, we're going to get fees, and we're going to get a monthly subscription fee. There are about 5 companies that are kind of doing similar thing, but we are the only ones that provide identity as a service, which is profile-centric and not tied to a specific device. We already have a minimum viable product. Our first revenue will start coming in early next year, as well as our B2C mobile application. We need 100K to bridge us to the first revenue. We're a team of 6 key people, full-time, plus 10 people that are helping us aside. Thank you.
So how does your product compare to other identity management solutions? So what's your differentiation?
So our major differentiation is the combination of the factors that you just saw. Because a lot of those identity solutions either provide ability to identify yourself without the ability to be the central point for your data, or they provide the ability for you to be the central point for your data without the ability to identify yourself or sign documents. In addition, we don't require the user to must have a blockchain, which is very important for companies because you are destroying a conversion rate if the end user has to install the application first and then onboard to any existing company service. With our solution, that is not necessary. They integrate with our web components or our native SDK for mobile, and it's really frictionless.
I don't understand how it actually works. Like, do you have to upload your ID and different to a system, and then somebody verifies it? How?
The actual process always starts with a one-time creation of your digital identity, which classically looks like scanning the front and back side of your ID card, then doing a liveness test where we match that you're a real person, then doing a face match where we match that you're the same person as the person on the ID card, and then, if necessary, a short call with a live agent to get a qualified certificate if you want to sign documents in future that can replace your handwritten signature.
Okay.
A lot of that is AI.
Okay. So you depend on a large number of people doing this process to actually work, to actually be useful.
Yes,
right?
that's why we are going in 2 directions at the same time. We are talking with the banks, so we are a part of the onboarding solution. This way, we get the power from the brand from the bank, because you're in the flow. And we are parallelly pushing, we will be soon, parallelly pushing the solution to a customer segment for us to be able to identify each other remotely.
Okay.
Can you talk a little bit about the experience your team has in this space?
We are a team of actually 15 people. Most of us have been working for a long time in KYC/ID segment, at least 4 years, because a lot of us have background experience from one European leading fintech startup in the area of KYC/ID. So we've been doing this for a long time.
And talk a little bit, if you would, about, I understand you think you're at MVP now.
Yeah.
What's the responses that you've gotten from the 2 sides of your...
Okay, B2B, we already pretty much went through all the regional banks because we don't have the money to go on European level, just to check if everything is okay. So the response is always the same because everybody wants to go through digital transformation. When will this be done and how much will it cost? Every single bank has signed us a letter of intent that we visited. So the problem that we are actually having is not if they want it, it's the speed that they are able to implement it. Because transformation requires a lot of time. From a B2C segment, it's a bit, of course, more vague because we have to push the people to be able to understand what they can do with our solution. But it will come naturally, I hope virally, because we will just spread it through the social networks. Airbnb requires identification, Tinder requires identification, local sales portals require identification while selling something, so people will spread it among themselves.
Have you gone through the process of hacking your own system yet and figuring out the vulnerabilities? And if so, what are the results?
It is security by design as a consequence of privacy by design. So we designed a system where you control your profile with your PIN, which is never stored anywhere. So that means that every time somebody requests your data, you have to enter your PIN to decrypt the data and deliver it to that company. We don't store the data, we just send it and delete it. So in the worst case scenario, if somebody would steal our complete database, it would just be a big bunch of garbage.
Okay, thank you very much to Identium. And last, but by no means least, pitching in the Startup Challenge in today's round, can we introduce the team from Vorig to the stage? Thank you very much.
Okay, good afternoon. So, today I'm going to talk about renting an apartment, but first I'll be starting this in the land of Teletubbies. These guys have a huge apartment. They're cool, but they're little devils, and they destroy stuff. And they have this cool guy called Noom Noom, and this guy fixes everything. But what if we're living in a land where there's no Nunu? He can't fix stuff. Then you get pictures like this. You rent your apartment and it's destroyed. Or somebody comes into your apartment and then doesn't pay the bills, or makes enough debt that you need to sell the apartment. So the problem is on both sides. On one side, tenants do not have the credit score they can provide. They don't have recommendations, they don't have down payment. And on the other side, you have landlords that cannot verify anything about you. They need to trust you and give you the apartment for you to destroy it or keep it as your own. We have a simple solution, one platform for two problems. For landlords, that means we will have a reliable tenant vetting model that they can see who you are, what you do you have money? And on the other side, for the tenants, we are going to provide financial services. Current platform is simple and fast, and we plan to keep it that way. So you just come to our platform, we authenticate you through your bank. Then we know that that is your identity. We know how much you earn. And then we analyze the data with other data that we collect and give it to your landlord, and you're certified to rent the apartment. And the problem is huge, because more and more people in Europe and in the world, in global, are renting versus owning because it's becoming more and more convenient to do so. What is our advantage? Well, we use AI and machine learning to identify your transactions. So when you do the payment, we know what you bought, how you spend your money, what are your habits. But we also use some other information that's available about you that we can provide for your report for your tenant. So how do we earn money? Well, we do the screening on the one side, on the other side, we sell financial products, such as insurances, short-term loans, and similar stuff. Our team is now getting bigger and bigger, so we keep it to a core team. It's 4 of us in core team, but now 7, and we're hiring the 8th person in the team, but a lot of different experiences from real estate market to financial markets. We are currently running our MVP in private beta, so people are testing it. We are testing our reports to see what comes out of it. We already got the first round of finance, so we are going to the creation markets in next 2 weeks. For the next year, we're planning to invade the DACH region, because the most people renting in Europe are the people actually in Germany, Switzerland, and Austria. this is us. So if you have any questions, please, now's the time. Thank you.
So what type of data sources do you have, and how is your scoring system different than a financial credit scoring system?
So most of the scoring systems are the same. The question is how you apply the scoring system to provide the data that's relevant for the people that you're targeting. For us, it's not about whether you can buy a car or whether you can, I don't know, travel across the world. It's about can you pay the rent that you're up for. So the financial part of our screening is how much you earn, because for most countries in Europe, you need to provide the data on your salary. So instead of going back and bringing some papers, we can do that for you digitally and shorten the period. In terms of the other data, we use some of the data now, but later on in our roadmap, we have much more data because we will get data from our platform. We will know when you rented, when you used the loan, when you used the down payment, did you destroy the apartment. So it will be sort of Airbnb, but with much more reliable data.
Where's the real estate agent in this whole model?
So real estate agents charge you a fee to bring you to the apartment. And if you're an owner of the apartment and you hire the real estate agency, you want to make sure that the real estate agency brings you the best customer or the best tenant that you want. So real estate agency can provide you with a token that we call Warwick token that you can use as a potential customer to verify yourself, and then the real estate agency can bring that report to their customers. And we actually have the white label product for the real estate agencies, so they can brand the reports as they did it, not us.
So how do you plan to monetize?
Sorry?
How do you plan to monetize?
So we have two models. The first one is screening. So we charge every screening, it's now 10 euros, but depending on the market, it will be different. But what we are also providing, we provide the same scoring that some digital banks use to provide you with insurances and short-term loans. So what we are now working on is few partnerships to provide you with insurance, and we will have a fee share with them to also provide us another way of income.
That's renter insurance?
Yeah.
Or landlord insurance?
So it's an insurance as a down payment. It's a model that's used in Switzerland, and it's used in Germany, but not across Europe. So we plan to partner with one digital insurance to make sure that that product is available across the European Union. Because there is a lot of movement from people inside the European Union, and bringing just your report or just somebody's recommendation, it's not simple if you're coming from, let's say, Italy to Germany, because Germans probably don't understand Italian, and then we want to make it simple.
So how are you thinking about acquiring the landlords, and what triggers them? Like, how frequently is the trigger that is going to allow you to get into their process flow?
So it's not easy. It's not a simple process, because we first need to establish the trust between us and the landlords. But when you see the different media outlets reporting about apartments being destroyed, it's quite similar to like catch a ride and take that article and say this would not happen if you used our service. So that's the way we're going to do it.
Okay.
Now, in some markets like San Francisco, renters are required to get referral letters, and now there are platforms that kind of rank tenants based on these referrals. How do you look at that way of processing? Because it's in many ways kind of getting to the same result. Might not be as accurate, but it's a live score, which is crowdsourced, so on and so forth. What's your view on that?
So we are actually trying to achieve the same result, because in Europe you need to bring it in the form of a letter. We want to make that letter digital, as those platforms are. But what we are going to do here is we will have identified persons behind those reports. So the tenants will be also identified through KYC or some other processes. So it's not somebody faking the letter, because we know that a lot of people moving across Europe fake the letters, and they come with just a piece of paper, and they know that somebody from France will not call into, I don't know, Ukraine because of the language difference, and they're quite sure that this will pass as a letter. And with digital letter, that is not the case.
What do you do to protect your users' privacy? I mean, I would be afraid of like you selling my data to someone else.
Absolutely. So we're in the European Union, the GDPR is here, we do everything we need to based on the law. But on the other side, the report is the ownership of the person being reported on. So we don't issue the reports to the third party. So you get the report and you need to send it. So there is this wall that cannot be breached if you don't send the message across that wall. So that's the way we made sure that nobody sees anything about you if you don't click and send the report to the second person.
Okay, thank you so much to Warren. Let's give them a round of applause.
Thank you.